Where is Bitcoin's headed now? So everyone is asking and want to know where Bitcoin's headed over the next couple of weeks as the Federal Reserve makes its big decision. And also, where is the SPY or the stock market headed? Is it going to do a reverse head and shoulders? Or is it not? Now, this is Pablo He-Man. As you know, you're watching my weekly market analysis. This is Pablo He-Man coming to you from Treasure Island. Wind is a bit big today. We're going to try to enjoy some views here whilst I'm in the shade as we analyze the markets. Here we go. One big news that has come out over the last few days, I would say, is obviously that the US GDP is now going negative. It fell 1.4% for the first 3 months. And the Fed is predicting it'll rise by 1%. It actually went down negative 1.4%. So they're disappointed by 2.4% down from expectations. That's pretty huge when you consider the United States GDP usually only grows about 3 to 4%. Now, what do we think of this news? I haven't heard a lot of great analysis on this. The reason, there's a lot of debate. People are saying that the US GDP is actually healthy right now. What do they mean by that? Without boring you, because this is very important, this is going to decide whether the Fed raises interest rates or not, or by how much, and that's going to crash Bitcoin and stocks or not. So let me take you through some basics. We might have learned in high school that the GDP equals consumption, C for consumption, G for government spending, I for investments, plus net exports. Now, without boring you, we're only going to focus on net exports today. I'm going to tell you straight away, without too much playing around, that consumption, government spending, and investments are doing okay. In fact, you could say they're relatively strong. Net exports, or net exports is where the United States went wrong this week. So here we go. Now, net exports. Where are we? Oh, oops. So here's a chart you see of the United States import and export. Right? Red line is import, blue line is export. So you know how Trump always complains there's a massive trade deficit with China? Well, this is what he's talking about, except this is not with just China, this is with the entire world. So what's happening here is basically this. You see, after the COVID recovery of early 2000, little recession there, basically United States imports have shot through the roof. Now that's actually a strong sign. What does that mean when United States imports are going through the roof? It means people have money, people are buying, consumers are buying, businesses are spending, businesses are investing and importing, raw materials or machinery from China. That means United States economy is healthy in a way. But look at this, export has it's still growing, but much slower than the import. Well, why is that? Well, one way you could look at it and you say, oh, maybe it's because, why is US export slowing down? Well, have you seen what the United States dollar is doing? United States dollar, and if you remember my old videos, I called this, went from essentially about 94, 95, 96 to about 103 now. That's a massive move for the United States dollar because it doesn't usually do that. And when it does something like this, basically, it means that exporting is going to get very expensive for the United States. So, for example, you compare to Japan. The Japanese yen has crashed to a 20-year low, something like a 25-year low now. It used to be something like 100 to 1 to the United States dollar. Now it's something like 130 to 1. So imagine US trying to export. Ford, General Motors trying to export into Japan. It's 30% more expensive now. Whereas Japanese people can easily export their Honda, Toyota, or Sony into the United States because it's so much cheaper now. Well, it can't export to Europe because it's got major inflation going on. And with inflation, you've also got the war. So essentially, Europeans are paying so much for gas fees, for petrol, because, Russia's putting the squeeze on the Europeans. So then basically, they're not consuming a lot more. They're not buying a lot more. So imports, US trying to sell stuff into Europe, those imports, of course, are going to suffer. Okay. But however, let's keep in mind the United States economy, as some analysts are saying, is actually kind of strong. So consumption, because these figures always come out along with the GDP, consumption is actually up 2.7%. Business fixed investment is up 9.2%. and residential is up 2.1%. Investment and consumption are relatively strong. Remember what we said before. GDP is investment plus consumption, right? They're actually relatively strong. Government spending, well, we know the United States government is always pumping money into the economy. So what a lot of these people, analysts, are saying is US government the economy is kind of strong. The problem is on the import and exports, so therefore we shouldn't worry that much. Now, here's the thing though. Here's US import exports, to put it in perspective. Now, this chart goes all the way back 70 years ago to 1950. And you can see that what we've just had, and this was the GFC, so we can kind of, this was the COVID, so we can kind of ignore that one. It's minus 3.2% right now, US net exports to imports. So which means US is exporting 3.2% less than net imports, right? And that you have to go all the way back to early 1980s, 40 years ago, to find the last time this happened. And it only happening for one quarter, right? And this level of trade deficit for the United States only happened twice, I would say, in the last 70 years. That's how bad the situation is. Now, I'm not one of those people who wants to ignore that, because as you know, I've been calling for a stagflation in the United States economy for a long time now. I'm not saying it's just recession. I'm saying stagflation, which means recession plus you have inflation. And a lot of people, I guess, didn't believe me. Usually people don't until they find out it's too late. And this time I'm saying the official definition of a recession in the United States is 2+ quarters. 2 quarters of economic shrinkage. We've just had 1 quarter already, so we're 1 more quarter away. And people might say, yeah, but the United States economy, the consumer confidence is actually growing. It's actually kind of strong. Well, what I would say to that is basically, to use a sports analogy, it's kind of like saying if you are looking at the Tom Brady and the Patriots, or Ronaldo and Manchester United, and you say, oh yeah, they lost that last game, but they're actually pretty strong because Ronaldo and Tom Brady, the offense is really strong. But if you're a American football player, analyst, you would look at it and say, but the defense was really shit. As in, the import-export of the United States was really crap. So are you telling me that by next game, yes, next week's game, Tom Brady will play really well, but are you telling me that its defense is somehow going to magically fix itself? What if the United States import-exports does not magically fix itself by next quarter? I don't see a reason why it should. I'm not saying anything's 100%, but there's a solid chance we have a very bad trade figures, and again, negative growth for United States, or very weak growth, and that could put United States into recession. Now, what does that mean for Bitcoins and the stock market? Here's the thing. The Fed is meeting in a day or two, and when the Fed meets right around here, when the Fed Reserve meets around here, it will essentially decide they're going to, how much rates they're going to raise. The market expecting about 25. The market is expecting 50 basis points, whereas a lot of people are expecting, like maybe 2% chance it's going to be 25 basis points. So I think what's going to happen is we see a little bit more downside on the SP 500 and on the stocks and on Bitcoin, and then we get a major bounce. We should. Let's see this chart. So I'm still thinking we get some sort of pullback here to mid-30s, maybe even lower 30s, and then big bounce in mid-May or early May. The reason for that is there are a number of chances for the United States Federal Reserve to turn around, for the markets to bottom. One is that the Federal Reserve could actually soften their stance. Don't get me wrong, I think they will still hike rates, 50 basis points come this Wednesday. But what they could do is, in the question and answer interview afterwards, they could say, we think inflation might be coming close to peaking, we will be flexible. And that's going to give the market a lot of confidence and make the markets rebound. The other issue is if we look at something like the US 2-year, US 10-year Treasury yields. Okay, here we go. This is the 10-year Treasury yields of the United States. As I've been saying for a while now, it probably is going to make a short-term, well, it has already. It's made a short-term pullback. It's gone basically in a crazy uptrend, right? It's very much parabolic. There is every chance it could pull back something like this, right? Pull back and bounce off that long term. That's a very long-term trend line you're looking at. Let me just put it on a weekly chart so we know what we're looking at. So basically, this was a multi-year, multi-decade, long-term. You know, we can see this goes all the way back to 94. Multi-decade, basically downtrend, and you can see it's bounced off here, right? It's broken right above a 30-year trend line, and now I think it'll come back for a retest from 2.95 where it is at right now, back down to about 2.3-ish, you know, and then rebound, and then go up. Eventually, it probably goes higher, but there's every chance of a pullback. If it pulls back, we all know when 10-year interest rate yields pull back, the Nasdaq is happy. Then the tech stocks will bounce, and when the tech stocks bounce, that's when Bitcoin follows and bounces as well. So essentially, I think there are 3 chances for Bitcoin, the stocks, to bottom sometime in the coming 2 or 3 weeks. One is obviously on Wednesday, you have the Federal Reserve, meeting, and afterwards, especially, I expect them to raise 50 basis points, just like the market does. Nothing different there. But however, in the question and answer afterwards, he might sound a little bit more dovish than normal, right? Which means they might say, we think inflation might have peaked. We might just be flexible in our stance. And that's going to be very, very bullish for stocks and Bitcoin. We could see a bottom this Wednesday or sometime around there. If they don't, and if they continue to bang this hawkish drum, if they don't take notice of the fact that the United States GDP's gone down for a quarter, and we're one more GDP shrinkage away from an official recession or stagflation in the United States, which I've been calling for a long time, as you know, then we have another chance. On 15th of May, the United States CPI, that's the inflation report, will come out. And as you know, the last few times, the CPI has printed something like 7.9% and then 8.4%. And the crazy thing about that is basically that this one might slow down. It's anybody's guess. Whatever slows down. If it slows down, then everyone will say, oh, that's peak inflation. It may not be, but everyone will say that it's peak inflation. Say if it only comes out at around 8.8%, everyone will say it's peak inflation. And when it is peak inflation, then the bond yields, what I've just shown you guys, the 10-year US Treasury bond yields here, which has gone so parabolic. Look at this. This is the long-term, this is the 30-year trend, and now of bond yields going down. And now because of fear of inflation, bond yields has just shot right up. I think it'll pull back to the trend line from 2.9 to about 2.3%, which is a big move for bond yields, right? Back to here, test the trend line, and then bounce off to eventually go higher. But the point is, on the 15th of May is another chance for Bitcoin to actually bottom and to actually bounce higher. And one more chance, Fed meeting minutes. Essentially, it's when the Federal Reserve records what they say in the meetings, and we can then have a look and see what was discussed and see which governors are in favor of raising 50 basis points and which governors are in favor of raising 75 basis points. There are probably some doves. Not everyone's hawkish. There are probably some doves who want to take the rate hikes and take the quantitative tightening slowly. And if that was to happen, then basically we will see the markets bottom and we will see a major rebound in stocks and Bitcoin. Okay, thank you for your time as always. This is Pablo He-Man, and this video goes out to my Discord first, and I put it out onto social media. I hope you guys have a wonderful day and happy time trading the markets. Nothing I say here is financial advice. We're just enjoying our time, and this is my personal diary, if you like, of recording my own thoughts on what's happened to the markets. Thank you. Bye-bye.